Welcome, deep divers. Today we're tackling a topic that might sound pretty niche initially, refinery catalysts. But honestly, stick with us, because here's where it gets really interesting. It tells us a lot about global industry. We're diving into a report from Cognitive Market Research called Refinery Catalyst Market, Global Trends and Future Projections. And what it shows is this market is, well, it's quietly booming. Think about this. Just over $5.5 billion back in 2021. And the projection, almost $9.7 billion by 2033, specifically 9,674.79 million. That works out to a compound annual growth rate, a CAGR, of 4.79%. So today we want to unpack these numbers, look region by region, and really understand what's driving this and, what it means for all of us.
Yeah, and it's fascinating because these catalysts, they're sort of the unsung heroes in the petrochemical world, aren't they? Think of them like superchargers inside an oil refinery.
Superchargers, I like that.
Exactly. They're these specialized substances that just dramatically speed up the chemical reactions needed, turning crude oil efficiently into gasoline, plastic, synthetic fibers. I mean, countless everyday things.
Right.
And it's not just about how much stuff a refinery makes, but the quality and the types of products, too.
Yeah.
That's key. So understanding this market, it's really significant. These numbers, they give us a direct pulse on global energy demand, industrial growth.
Yeah.
Where the world's economy is actually shifting.
That's a great way to frame it, a pulse on global shifts. So we've got this steady, pretty robust upward trend globally. The big question then is, where's all this growth really coming from? The report maps it out quite clearly.
Right, absolutely. The core takeaway from the Cognitive Market Research report is, well, it's pretty eye-opening. You've got established regions, North America, Europe, holding steady with significant demand, of course. But the real dynamic growth, the engines, you could say, they're firmly in Asia Pacific and South America.
Yep.
And within those, the report really zeroes in on China, India, and Brazil. They're flagged as the most energetic players pushing this expansion forward. That kind of sets our agenda for digging deeper.
All right, let's kick off with the heavyweight champion, as the report almost calls it, Asia Pacific. This region isn't just growing, it's exploding. Market revenue was just under $2 billion in 2021, 1,975.54 million to be exact, projected to hit an incredible $3.65 billion roughly by 2033.
Wow.
And that's the highest regional CGR we'll discuss today, 5.431%, just staggering growth.
It absolutely is. And when you look into why, the report makes it clear the momentum is largely down to two giants, China and India. China especially. It's singled out as the fastest growing country in the whole report.
The fastest.
Yep. Expected to hit about $1.45 billion by 2033. That's a TGR of 5.973%. Just outstanding. And India is not far behind at all, showing really strong growth, projected around $680 million by 2033, with a CGR of 5.938%. Also very robust.
Okay, so China and India are the real drivers there.
Exactly. And if you connect that to the bigger picture, I mean, it just highlights this massive push for petrochemical self-sufficiency in those countries. You've got rapidly growing middle classes, booming manufacturing, huge demand for everything from infrastructure to plastics, advanced materials. They're building new refining capacity like crazy, and that directly fuels the demand for these catalysts.
That makes perfect sense. That look at China and India really clarifies the Asia-Pacific story. Okay, so let's shift gears a bit. While Asia-Pacific is building incredibly fast, South America is also making really significant moves. The market there is growing from just over $300 million in 2021 to a forecast of around $638.5 million by 2033. That's still a very healthy CAGR, 4.99%. Shows real expansion across the continent.
Yeah, it does. And within South America, Brazil is definitely the one to watch. It's leading the pack regionally. Projected to hit over $212 million by 2033 with a notable 5.189% CAGR.
So Brazil's pulling ahead there.
Right. It really shows Brazil's significant role in the continent's expansion. And this largely reflects, a big push towards energy independence. Plus, increasing domestic demand for refined products as cities grow and industries mature across the continent, there's this clear drive to process more of their own resources locally.
Got it. Okay, now let's pivot to the more, let's say, established markets. Regions that are already huge, even if the growth rate isn't quite as explosive. North America, for instance. Still a major stronghold. It's a big market, growing from over $1.6 billion in 21 to a projected $2.68 billion by 2033. That's a solid CAGR of 4.419%. Maybe not Asia-Pacific numbers, but still foundational.
Indeed. And no surprise, within North America, the U.S. is the dominant force, expected to climb over $2 billion by 2033. which really highlights the maturity, the steady demand in that market.
Mm.
But what's interesting here, and the report touches on this, is that North America's growth isn't so much about building brand new refineries.
Right, it's different.
It's more about ongoing investment in upgrading the ones they already have, driven by things like demands for cleaner fuels, tighter environmental rules, and also needing the flexibility to process different types of crude oil.
Oh.
All of that requires more advanced, often more expensive catalysts, things like hydrocracking catalysts to get lighter fuels.
Okay. So it's about sophistication there.
Precisely. And Canada and Mexico chip in too, of course. Actually, Canada shows a slightly higher CAGR than the U.S., 4.808%, which suggests some focused investment in specific parts of its refining sector.
Interesting detail on Canada. Okay, let's hop across the Atlantic to Europe. Here, the picture seems a bit more mixed, more diverse across the continent. The overall European market is growing from about $1.14 billion in 2021 to $1.91 billion by 2033. That's a respectable CDR of 4.593%. But what caught my eye was Germany singled out as one of the strongest individual markets, projecting a 5.003% CEGR. And even more intriguing, this rest of Europe category, it's actually the fastest growing subregion within Europe, a 5.458% CAGR there.
Yeah, and that raises a really important question, doesn't it? What does this variation across Europe tell us about their different industrial policies, their energy strategies? The report kind of hints that Germany's steady demand reflects its mature, high-value manufacturing base and those consistently strict fuel standards. They always need advanced catalysts.
Makes sense for Germany.
Right. But the higher growth in the rest of Europe, well, that might point to more targeted investments, maybe newer, smaller, or more specialized refineries, potentially in Eastern European countries looking to modernize, or maybe upgrading older plants to meet new environmental regs. It's varied.
So it's not one single story for Europe?
Definitely not. And
Yeah.
conversely, you see countries like Italy and Sweden showing some of the lower CAGRs in Europe, around 3.5%, 3.7%, which suggests maybe a different pace, perhaps a bigger focus shifting towards renewables that impacts traditional refinery investment.
That's a crucial point, the complexity within Europe. Okay, moving on to the emerging regions. The Middle East, it shows steady growth, but comparatively slower than the others we've talked about, expanding from around $260 million in 2021 to just over $406 million by 2033. The CAGR there is 3.327%. Saudi Arabia is noted as the regional leader, contributing a big chunk of that.
Indeed. And a really key detail here is the rest of the Middle East subcategory.
Yeah.
It actually has the lowest METO-GR in the entire report, just 2.933%.
The lowest globally. Wow.
Yeah. And that gives us a pretty important insight into the region's overall trajectory. It suggests a market that's maybe largely finished its major capacity building phase, and now the focus is shifting more towards optimization, efficiency improvements, maybe targeting higher value products or specialized petrochemicals rather than just sheer volume growth. Kind of refining smarter, not just bigger in some places.
Refining smarter. Interesting angle. Okay, last stop on our tour, Africa. This region represents significant emerging potential. The market was valued around $215 million in 2021, expected to reach nearly $368 million by 2033. That reflects a CDR of 3.799%. And within Africa, Nigeria stands out with the highest CGR on the continent at 4.006%.
Right. And what's important to maybe reiterate here is that even though these regions in Middle East and Africa have lower CGRs compared to, say, Asia Pacific or South America.
Yeah, they're not stagnant.
Exactly. They're not stagnant at all. They still represent significant ongoing industrial development. They're contributing meaningfully to the global growth story. These aren't markets standing still. They're actively expanding and modernizing their refining capacity, reflecting their own unique paths towards industrialization and energy security.
Okay, great point. Let's try and wrap this up and pull it all together for you listening. What we've seen is a global market for these refinery catalysts that's growing consistently. It's set to hit that really impressive near $9.7 billion mark by 2033. The key takeaways seem pretty clear. Asia Pacific and South America are the main growth engines. You've got powerhouse countries like China, India, Brazil really driving things forward with some of the highest growth rates globally. But we also saw how established markets like North America and Europe aren't standing still either. They're evolving, focusing on upgrades, specialized demands, and regions like the Middle East are maybe shifting focus, optimizing for efficiency and higher value stuff.
Which, raises a really important question, I think. If these catalysts are so fundamental, so essential to global refining, what can these specific market trends actually tell us about where energy demand and industrial development are headed worldwide over the next decade or so?
Right. What's the bigger picture?
Exactly. These markets might seem niche, but they're actually critical indicators. They signal broader global shifts in economic power, how we're using resources, even technological advances in energy processing. The expansion we've talked about, it directly mirrors where industrialization is picking up speed, where energy needs are changing fastest, and where countries are investing heavily in their long-term economic independence.
Absolutely fascinating. So maybe as you go about your day-to-day, just think about how these hidden components, these unseen catalysts, are quietly working behind the scenes, shaping global economies, influencing the very products we use every single day. The clothes you wear, the fuel in your car, they play a part. It really makes you wonder, doesn't it? What other invisible markets like this one are out there, driving huge global value and shaping what comes next? Thank you for joining us on this deep dive into the refinery catalyst market. Until next time.